Crossing the coveted 20,000 mark for the first time, Nifty hits its fresh high of 20,000 level on Monday. Nifty's last all-time high was 19,991 levels, which it hit on July 20 this year. Does a scale a fresh peak in 36 seconds, while Nifty rallied to its new high of 20,000, BSE Sensex also regained its 67,000 mark. In this video, we will discuss what should investors do when the markets are at an all-time high. Hello everyone, my name is Shahnawaz and I welcome you all to Fin2 Presents Friday First Cut. According to the Indian experts, this rally in the key benchmark indices is mainly due to the participatory rally in the key benchmark indices. The continuous flows by FIIs, DIIs and Indian retail investors have led to the continuous flows in the market, which resulted in the record new highs. On recent triggers that worked in the favor of the Indian stock market, the resounding success of G20 has also attracted many foreign investors and global investors towards Indian market. So the first thing that investors should do is understand the situation. So first of all, let's understand what does it actually mean when we say that stock market are at an all-time high. Now, that's a great news for the existing investors which have been there in the market for a while, but it can also raise some questions and concerns as to what investors should do next. The second and most important piece of advice is don't panic. Just because the markets have touched the all-time high, it does not mean that it will lead to a market crash. The history shows the market tends to go up over long term. So, there have been 63 sessions in the last 20 years since 2020 when the Nifty 50 has ended on a month of new high. And only in 23 months the markets fell after a new high. In other words, there have been 40 sessions in the last 20 years when the stock markets kept rising high and clocked new highs after new high. Third important point is diversification. One of the key principles of investing is diversification. Regardless of the market condition, it's always crucial to have a well-diverse portfolio. Diversification helps spread risk. So even if one sector or asset class in your portfolio falters, your overall portfolio will remain stable. So if you have a long-term investment horizon, even if the market goes ups or down, stay invested until you achieve your investment horizon in order to achieve your financial goals. Trying to time the market and selling when the markets are at all-time high and buying back it later can be a little risky and maybe even difficult to execute successfully. Fifth important point is rupee-cost averaging. A strategy that can help you navigate at all-time high is rupee-cost averaging. This means investing at regular intervals of time through mutual fund SIP regardless of the market conditions. This helps to mitigate volatility. Next important point is review your risk tolerance. It's very crucial to review your risk tolerance at different intervals of time. Ask yourself questions such as how comfortable you are with short-term market falls or losses in your investments. If market makes you nervous, consider adjusting to an asset allocation which is on a more conservative side. So the seventh important point is research and due diligence. So let's talk about due diligence. So before making any investment decisions or investment choices, make sure you do your proper research. Look at company's fundamentals, its growth potential, the industry it operates in, and then make informed investment decisions. The next important point is defensive stocks. These are companies which tend to be less effective due to the economic downturn. Think about sectors such as utilities, healthcare and consumer staples. Having an exit strategy is very crucial. Deciding well in advance when to sell or when to trim your positions when the market conditions change. This can help you protect your gains and limit your potential losses. So the last and the most important point is consult a financial advisor. A financial advisor can provide you personalized advice tailored to your financial goals and risk tolerance. So there you have it, some essential tips for investors to consider when the stock market are at an all-time high. And remember, investing is a long-term game and stay invested in order to achieve your financial goals. If you found this video helpful, do give it a thumbs up, subscribe to our YouTube channel and share it with people who might find it beneficial. Thank you so much for watching this video and I see you all in the next video.